breakdown. It's been a little bit. I ended up getting really sick last week. I know in the previous breakdown I mentioned that I had a little bit of a sinus infection. Well, it turned out to be this full-blown little ear thing, and then I ended up having all this discharge, whatever stuff you guys wouldn't really hear about. So got fixed up, took some antibiotics, but just definitely took last week off. But I still did a Monday market breakdown only for our community. So what I will do is I will add the 30-second snippets of the analysis that I put out there last week into this breakdown. All right. So as you guys see, we've had some serious price action. Haven't seen volatility like this since Brexit, and for the euro for a really long time, really since that Trump election, where we saw that 8% move to the sell side on this euro USD. But as you guys see, we have just gotten a lot of political uncertainty discharged from this euro USD. All right, so Miss Marine Le Pen, she's not doing so hot. 78% of the citizens that were at least surveyed in France don't want to leave the EU. Okay, so I kind of just hopped right into things. Sorry about that, guys. As you guys know, we're going to go over our three pairs: Euro, Aussie, and GBP. And there's a couple other things that I like in terms of that JPY that I might go over as well. But again, folks, you got to understand, there was a lot of political uncertainty, and I want to go into the charts, and I'm going to show you guys there was political uncertainty priced into the market. Euro had a really hard time breaking out of the $0.9s, and it really took some serious fundamental implications to get us back up into that level. But as you guys know, the euro was at a serious discount. The fact that I was sitting in the 06s, the 07s, that's why I really wanted to buy for the past 2 weeks, which is what we did, which is why a lot of guys in the community end up actually making some pretty good money buying that euro up. I'm not sure if anybody was in that had any kind of pendings on, but if they did, that was pretty awesome. I know some guys had some sell side pendings on, some sell side positions on, thinking they were going to get a retracement, so they actually got murked a little bit on that jump there, but came right back up into structure. Price discovery allowed for this thing to rip all the way back up into the 09 flats, where again, you got to ask yourself, are we getting fair value here? Okay, I mean, is there still a mispricing of this euro USD based off of Marine Le Pen losing to Macron, whatever his name is? All right, so I think so. Now, obviously, this gap's got to fill. I do not think that there is enough risk on the sell side for this gap not to fill. I think we can definitely get some sell side move, at least back down to the 08 flats. I'll show you guys into the charts. So, up until then, I am in a selling ideal just based off the liquidity issues. But then after that, guys, we could definitely rip into the 10s and the 11s. All right, so that's interesting. Aussie. That Aussie is going to it's going to be dictated by what's happening in the U.S. It really is. We can go over to the charts and look at a couple of things. It also gapped, but the way things look, it's interesting. I love the structure. We've really held that 38.2 on that huge swing from the euro from the beginning of the year all the way up into the 77s, high 77s. And at the moment right now, again, we're sitting right there. I think we're sitting in the 75s. We're sitting in the 75-60. So, you have to ask yourself, can this thing pull back? Is it really going to maintain the high of that 2-year consolidation that ranges from 2015 all the way up into now? I'll show you in the chart what I'm talking about. Or are we going to actually start getting some price action back down in to the 74s? I mean, we've been sitting up here in this level since January. You just have to ask yourself, what kind of fundamentals need to play out to get us to where we need to get to? Wednesday, okay? Wednesday might be the day that actually give this market a little bit of a jawbone, right? So Trump's coming out with some huge. Check his Twitter out. I've put a little snippet to it. Trump's coming out with some huge tax reform announcement on Wednesday. That might be the stuff that pushes us around in this marketplace. It actually also might be what fills this gap on this Euro USD. So I would kind of wait a second before you start trying to get this gap filled. You don't want to start guessing that the market's going to go to the sell. This could easily continue, push up one more leg before we get some sell side momentum. So I will wait till Wednesday to kind of see how price action's adding up before I start getting in on any kind of sells on that euro. Now, obviously, that's just an idea, right? If I really see this market adding up to do any kind of sell side situation tomorrow, tonight, then something could definitely give me a catalyst to just run in that thing. But other than that, we push over into the pound. I love this pound right now. I really do. Pound ran to the $1.30s. I'm going to put in the snippet of right now of where I mentioned that I could see this pound run up into the $1.30s last week. I only mentioned this in our community, so if you're just on the YouTube and subscribe, you didn't get it. But if you are in the community, you saw this little snippet right here. All right, check this out.
Interesting. I love the way the pound looks on the monthly as well. Check that out. This thing looks like it's ready to pop. So we're sitting again under here, this 23.6, and first place. Where could we go? Boom. I mean, another 500 points to the 30s. We could definitely get there. I love the way this pound is structured right now. It's amazing.
Okay, so it's crazy how you got to understand, guys. Efficient markets, they run real quick, and the second you see an opportunity, literally, even on a weekly perspective, even on a daily and on a 4-hour perspective, you have to be actionable. You have to be quick to getting in on these moves, okay? So that's a perfect example of having an idea in terms of, hey, look, we could push up into this level, and then boom, we're immediately there. So now, did I assume that we're going to get that much volatility up into that price level there? No. But did I mention that, hey, the thing that's going to get us out of this level here is some fundamental idea? Yeah, I did mention that, and that's exactly what happened. But not Marie Le Pen, but Theresa May actually mentioned, I think last Wednesday, she mentioned how they're doing some kind of surprise election, right? And so, those ideas and all the different things that are coming out in terms of this pound and this, all the different things going on with Brexit and the particular, I guess, penalties that the EU might crack down on Brexit. All these different things are kind of making this market run, man. And so we saw this thing immediately push right back up into structure, right up into the 29s, and we're sitting here now. So again, there's going to be a liquidity issue. I really feel that. So I do want to start putting some sell side pressure on this pound, but I'm not going to get triggered. I'll go into the charts and I'll show you guys exactly where I want to start executing on that. Okay. So other than that, folks, we actually do have some really nice moves this week. I want you guys to be up on your game. There's no reason why you can't make money this week. But remember, you want to wait on those opportunities. No assumptions. Assumptions can get you caught up in really bad trading scenarios that you really don't want to be in. Allow the market to do what you perceive it's going to do. Okay, and you do that by doing what? All right, you have to ask yourself things in a structured manner, in an if-then statement. If the market does this, then I'm going to do this. Okay, so that's going to give you your edge. That's going to give you the opportunity to allow the market to formulate an idea. And allow you to formulate an idea about what the market's going to do, and then allow the market to either do it or not, okay? And so that's how you really start quantifying if your strategy works or not. Because you always, that if statement, that if the market does this, that's technically your strategy. Because that's the thing you're looking for. Hey, if the market does this, then I'm going to do that. That's the repeatable, structured method that you're going to use to have consistent profits coming in. But if that if is unclear, and if you can't really find exactly what if is, in the market, then you don't really know what your edge is, and you're going to be at a disadvantage, right? So, guys, do the best you can to really quantify and refine exactly what you're looking for, and then just, again, it's a strategy. Don't switch your strategy up, right? You hopefully can use it time and time and time again, and that's going to allow you to have some kind of consistency in terms of what you're looking for. You can sit on your hands, and when you don't see something, and when you do see something, you can execute on it, okay? So let's pull over to the charts. I'm going to just run the camera until maybe a thing dies out. And we'll pull over to the charts and we'll see exactly what this euro is looking like right now. And we'll go over our three, and we might check out another pair or two. Okay, so let's pull over to the charts. All right, guys, so checking out this Euro U, look at this price action, okay? So when I was on Oanda actually didn't show me that it was a gap. It just showed me a huge candlestick up into this price level here. But on Thinkorswim, definitely a gap, okay? This move happened in less than 30 seconds, all right, the entire move. Whether you look at this, whether you're looking at the Euro GBP, which also had a huge push to the upside, all those moves happened instantaneously. So if you did have pending orders in, they did not get filled, okay? I mean, at least I know all of the guys in Oanda didn't get filled. All right, this market jumped right over it, okay? So looking at this pair, guys, you know what I want to do? I want to pull back and kind of, examine things on a weekly perspective real quick. Remember what I just mentioned. I was saying to you guys that political uncertainty was priced into the market. No one wanted to get balls deep into this Euro USD because we didn't have really any kind of conclusion as to what was going to happen with the French election. You got to think, this chick Marie Le Pen, if you look at some of her speeches and if you listen to what she says, she is extremely radical. I mean, she literally wants to pass laws that doesn't allow for Muslims to wear their hijab and all these other different things involving Jewish people not being able to wear their cool little caps too. Maybe I need to get more culture to know exactly what those caps are called. It just doesn't come to me right now. But at the end of the day, it's like, come on, this lady is very, very radical. And, again, having somebody with those kind of standpoints, being a prime minister, being a president of an entire nation, one of the most powerful nations in the European Union, man, she wants to segue out of this, socialist, government ran, infrastructure as soon as possible. Okay, I mean, this is what she's thinking, and this is what her followers are thinking as well. All right, so again, she's really just a female Trump over there, kind of wrecking things up in terms of saying that she's a nationalist. Being with this whole idea of separatism and populism. She's a front runner in those ideals, and I'm telling you guys, that was priced into the market. You can't just ignore that as an investor, because if that economy leaves out of the European Union, that euro is going to be demonstrably lower in terms of value. Okay, that's a booming economy over there where there's a lot of imports and exports, and you're going to see an effect if that economy doesn't exist within the union. Okay, so that was being priced in. Luckily enough, she's not doing so hot. Okay, so now what does that do? If you actually go look into gold, and I'll pull up gold as well, you'll notice gold also had a little bit of a hit. And why did it have a hit? Because, again, folks, remember, when there's political unrest, when there's not much understanding in terms of, where these markets are going to go on the economic side, people always run to gold. Gold is the place where it's like a safe haven. But since we saw some good some good euro fundamentals come out, you saw a huge cut in gold because people left gold and probably went into euro bonds, went into the bond market. Technically, it's called. I think that's the German 10-year bond. Which is again another very popular interest rate driven market there. In the interest rate market, a lot of individuals say on the institutional trading level, they say the Forex market is the interest rate market. All right, so again, you see a lot of price action in this gold leaving to the sell side based off of what's happening over there in the European Union. All right, so very interesting to note. Now, obviously, we have to talk about the price action. We have to talk about the technicals a bit here. And the technicals, again, remember, folks, hopefully you want to assume that the technicals are going to run and be in line with the fundamentals. And in this case, they're not. There's a lot of bullish sentiment that wants to push this euro higher. But there's a liquidity issue, folks. I mean, if we're looking at this chart right now, what you'll notice is we just have this enormous gap, all the way from the 0727s, and then we don't have price action until the 0873s. I'm sorry, the 07 27s, 29s. Okay, so gaps have to fill. When you look at gaps being filled and the probability of gaps being filled, it's extremely likely. It's a very likely trade that even the rookie newbie traders, they're always talking about, hey, there's a gap, right? They may not understand why the gaps fill, but at the end of the day, they know it's a likely trade. So again, you don't have to be a genius to be trading, but you do have to have that kind of information at hand. So am I one of those guys that think that this gap could fill on this Euro USD? Definitely. All right. So we came right back up into price structure. I don't know if I put a loop. I did put a loop into where I thought this market could head, and we're much further than I anticipated, at least in terms of the soonness of it. So when you have a really momentous market, guys, when you have price structure to the upside where there may not be too many more buyers really looking to start doing some buying up here in these highs, in these 09s, high 08s, you got to have some gap fill, and that's what I'm looking for in this Euro USD, all right? So it's a pretty easy trigger. Don't play in the range here, folks. I mean, that's a bad idea. You probably want to start seeing price action start to sell off a bit before you start guessing that the gap is going to actually fill. You'd be sidelined and you'd be washed out of the market quite often if you're one of those guys that just like to have an assumption in terms of, hey, the market's going to sell. I want to get in right now at the 0866, which means I'm going to save myself 20 extra pips of downside. Well, at the end of the day, yeah, you're going to be saving yourself 20 extra pips of downside, but you got to ask yourself, do you really know the probability, and do you really understand the nuances of this market to the extent to where you can say, hey, look, even though I'm getting in up here where this market hasn't shown me that it's going to sell, I still think it's going to happen. Again, time and time again, that adds up to be a failing strategy. So I like the market to break levels and to create structural formations that give me an edge. And that first edge, folks, is that level breaking down here. So probably in the 0830s is where I really want to start looking at this market to start selling it off. Now, if there's some different kind of price formation that allows this euro to maybe kind of push back up a bit, this is what I mentioned earlier during my little fundamental outlook. We may get maybe one last push up before Wednesday, before Trump's little speech. We may get one last push up before this market turns over. Okay, because just as likely as there may be some sell side momentum, you got to think the market's already been testing this low here. We could easily have this market start testing some of the price structure up here in this high as well. So you want to just really sit on your hands and kind of evaluate things with a logical standpoint. You got to understand what price discovery does and what liquidity issues do. There's available buying and selling happening from the 0917s all the way down to the 0877s. All right, so the market's much more likely to head up into those areas than it is for it to just break that low. Now, could it just break the low? Absolutely, but remember, there's a slight risk element to start taking sells right now, hopping in the market right now. You could have some downside based off of the available liquidity up here at those highs. Okay, so just take your time. That's my trade on it. If I could catch a little bit of an up move and then not actually get in on any kind of buy or anything, maybe, who knows? I don't know. We just got to see how price action adds up. But if I could just start to see some kind of sell side ideas happening down here at these up here in these 09s, high 08s, then potentially that could set me up to even get a better price rather than getting in at the 0830s. Okay, so that's it. That's what I'm looking for. Maybe able to catch a buy up into that level. Who knows? We just have to see how things add up. But obviously, the most highly probable trade right now is that gap fill. If we push over into that Aussie, same thing, folks. I mean, if you look at it, we did have a gap up. All right, and this is that swing that I was telling you guys about that started at the beginning of the year. Literally, it tracks gold very, very well. Go check out my last breakdowns, and you guys will see how often I was using this Aussie and gold assimilation to kind of give myself an idea as to where this market's going to go. So again, man, this Aussie a gap fill scenario should occur. All right, so that's another setup, but again, it's not the most beautiful trade in the world. Aussies, obviously, like as I mentioned, we've been stuck up here in these in the 05s all the way up into the 77s for quite some time, all this year really. And again, that's really the high of this range here. If I pull over and I show you guys this range that I'm talking about, I might actually have to even go over to the monthly. Okay, so what you'll notice is if I take this fib off here and I give you guys some ideas in terms of price levels, notice what's going on here, all right? So what you'll see is this market holds this range up here quite often. Boom, 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 boom. Okay, sometimes we dip under, but then boom, boom, boom. All right, so you guys will notice this is a very sound structural level here. Okay, so you have to have an idea as to this monthly level, and it definitely has implications as to my trading decisions. All right, so if I ease down near this level, look, I really need to have something fundamentally that can push me outside of it, because price action alone and technicals alone is going to have a hard time doing it. So, if we can get some good U.S. news coming out Wednesday, and if we could have this market kind of sit and stay near these levels where it's at, the 75, right now is at 75.70. If we have price action kind of hang out down here in these lows, then we could definitely see this thing pop and break this low here. So if you notice on the daily, you can kind of notice it. You can see what I'm talking about here. This structural level that seems to always be held unless, boom, you have Trump's election here, okay? Then you have interest rates, all right? That pushed us out. Back here, I forget exactly what happened back here. I think it had something to do with the Australian real estate market. But again, boom, we had actual price action that could push us outside of that low there. We need that to happen again. And currently, this is a good sign, folks. We're sitting down here at this low, and it seems as if we've actually had some kind of retracement, okay? From this high to this low, we've retraced, it looks like 38.2% already. So let's draw that up and see what this is here. Okay, so yeah, we've retraced 38.2%. We've had some wicks up into the 50. That's a sizable enough retracement for this thing to turn on over. So, I mean, if you want to catch a sell, if you're a retracement bound sell side player, then you would really start looking to sell right now, because you would then say to yourself, hey, look, I'm at the high of this retracement here. My downside, the upside risk on this is really just the 50 or this. Maybe you could even put your stops near the 61.8. But my upside to this position, technically the downside at which I could make money is I could break this low and then we could continue on down to to the next low here, maybe in the 74s, mid 74s to the low 74s. So again, folks, it's a really nice looking setup. If we can break that low, if Trump actually comes out and actually says something on Wednesday, we'll definitely get some sizable price action to the sell side. Not only that, you're also playing the gap fill. Okay, you're playing the gap fill. This gap could fill, which is, again, now we're mixing in a situation where, hey, look, the fundamentals are aligning with the technicals. Boom, there you go. You get a highly probable setup, okay? So that'd be a nice trade to get in on, and that's something that I'm going to be looking for. Now, could this thing hold this level up here and continue to pop and none of this shit play out? Absolutely. But remember, I'm sitting on my hands, all right? I'm not guessing. I can formulate all the trading ideas I want. If I don't execute on them, then at the end of the day, I don't lose any money, but also I don't make any money, right? So if this doesn't do what I like and doesn't, create the price structures that I really want, that I want it to do, and that I want to look for, then I'm not going to execute. So remember, folks, I really would like to see this market really start to. This Aussie session is about to open up. I don't want this high to be broken here. If you notice, this is an interesting high. It's a very flat level. It actually looks pretty nice, in terms of price structure for a buy. But it would be unfortunate if this market bought up, because if it did, it just kind of hurts my probabilities for this low here to be broken, this gap to be filled, so on and so forth. This isn't that much of an important gap as the euro is for it to fill. Okay, we're inside price structure. Didn't gap as substantially as it did over there on the euro side. So, we already had some wicks back down in. It's not as substantial. So, again, folks, we just have to see how price action adds up. This Aussies, it's an interesting situation. Will I take a buy this afternoon, maybe up into structure, potentially, plausibly, who knows? I'm going to push this out into the community. I'm going to let you guys know exactly what I'm looking for. All right, so for this pound's a really simple trade, folks. I'm going to pull over into this weekly real quick. We're going to wrap this up. Now, I pushed that snippet out there as to what my ideas were, and we ran up into that level way quicker than expected. Remember, and notice what I mentioned, though, guys. You got to pay attention. I said we need fundamentals to get us out there. Your technical analysis is not going to tell you that this pound is about to rip 290 pips. All right, so when traders start maxing out a technical analysis and have no idea what's happening fundamentally, you're going to lose, all right? You're going to not understand, and you're not going to have an edge as to what's happening in the marketplace, okay? A great example, which I use all the time, is The Big Short, the movie The Big Short. The guy that was managing that firm, he didn't have technical analysis that gave him an idea as to how as the idea of the trade that he wanted to do in terms of shorting the real estate market. Folks, he had a lot of data. He had a lot of information about the market itself, okay? These markets aren't moving just because you're drawing up lines on them and putting support and resistance levels on the shit, okay? There's true fundamental things happening, real lives, real money, real economic concerns at stake here that drive this market. If I show you the largest price moves in these charts on a weekly perspective and on a daily perspective and on a monthly perspective, it's all fundamental. It's all fundamentally based. It's all fundamental price movements that have driven this market around, all right? And if you have no idea what those fundamentals are, then you're at an immense disadvantage, okay? So again, we saw this we saw this pound push out of this price level here because of the fundamentals that came in. Now, we have to have an idea as to the technicals, okay? Then you start looking at the technicals and you start asking yourself, okay, well, technically and, based off of the market structure and based off of the amount of available liquidity that there might be up here at these highs, what are my options? What is this market going to do? And for me, I want to see this thing sell off a bit. I think that we actually have some sell side room down into the 20. This thing could push into the 26s. But if if you notice, if I pull back a bit and let's just sit right here on this 4 hour. I guess I drew up this level here. 2650s is it's the level where we're gonna start seeing actual price action. But up until then, we have a gap. And that's an amazing trading opportunity for us to be in, all right? So where we have price action, we don't have price action for a while, the markets like to fill that gap, especially if there was a fast, momentous move up into the higher structure, okay? So if I draw up some fibs here, there's something that I don't like, which is we've already broke the 23.6, which is the most probable place to start taking shorts, all right? And so your next best option is to take this low of consolidation here. All right, so this low of consolidation puts you at the 2760s. I wouldn't really start easing into this thing until the low 2760s, high 2750s, and I would probably size in. So anytime someone puts on multiple positions, this is hopefully why they're doing it. They're actually having to, have the market show them that, hey, look, this short ideal is coming true. Hopefully they don't put their full size of their position straight onto the fucking trade here. That wouldn't be a good idea, all right? Not only are you getting in an area that isn't the most probable, remember, your most probable area to really start shorting this thing was this 23.6. You're also setting yourself up for a trade that may not actually even work out. So you're putting too much faith in the direction as well. So maybe we can go into that a little bit later on. But yeah, it's a very simple trade. We might have to start taking some shorts down here in the 20s, in the 2760s. If we can get some price action back up into the flat here, maybe 28.10s. Which is only around 30 pips away. If we get some price action up into the 38.10s and we see this pound hold that level there, then we could start saying, okay, well, we can start sizing in and putting some shorts in right there at that level. That could be something that could be nice for us. But other than that, it doesn't matter how we get in. We got to short the damn thing, all right? So, at the end of the day, if you have to get in at the low, get in at the low. If you think the thing's going to going short after one more push back up into the mids here, the 28 flats, then get in at that level. But at the end of the day, it's a really good shorting opportunity. Now, can this thing run and rip straight to $1.30? Absolutely. Is that where my projections are in the long term? Absolutely, okay? Every institutional investor and every analyst knows that this pound right now is ghastly undervalued when it comes to when you look at the actual numbers and the actual economy itself. This thing is undervalued. We've had an overreaction here of this Brexit, okay? And so we should definitely start to see some relief coming in on this GBP right here, okay? So guys, just have an idea of what you want to look for. Have an idea as to what your trade is and what's actually happening in terms of market structure and where these and what the underlying sentiment is based off of the fundamentals at hand. Okay, and then you will start to arrive at a place where you have a really solid understanding of, hey, look, this is the degree of risk in terms of a position I want to see the market in before I start taking any kind of positions. Because remember, there's a risk element for this pound to be up there at those highs. There may not be that many people wanting to buy the pound up there in the 29s. Okay, right now sitting at the high 27s. So you have to ask yourself, well, if there aren't going to be any buyers up there and we have a steady stream of selling still coming in, then we're going to have a retracement. Okay, so but if you think there's going to be an equal match or more buyers coming in than sellers, then you're not yet ready to hop in on this sell. But you have to have an idea as to why that's the case. And again, if Trump actually says something on Wednesday, we can get that pullback and we can actually make some money. All right, so I'm gonna make some money this week. I really am. Hopefully the next Monday market breakdown I can let you guys know what the P&L was. But other than that, folks, remember your profit always my motive. You guys got any questions? Let me know. Get inside that rookie room and get inside that free course on motivefx.com. I'll see you guys later. Peace.